This is episode 182 of the Andrew Hines Real Estate Investing Podcast. Welcome to episode 182 of the Andrew Hines Real Estate Investing Podcast. Today I have Jake Novis on the show. And Jake is a relatively young real estate investor who is pretty aggressive. He's got about 35 units in his portfolio, and he quit his job a few years back to go full-time in real estate. And I have the utmost respect for anybody who does that because there's a lot of uncertainties in that game, and you got to have a heck of a lot of confidence, which Jake definitely seems to have. And it was interesting talking to him about the intricacies of starting a property management business, which he did, how to make that profitable, some of the pitfalls of being in that type of a business. We also talked about the various different partnerships he has, how he structured a VTB on a couple of properties that he did in Alliston, and how he's making those numbers work, as well as his new endeavor into being a full-time realtor in addition to a real estate investor. So Jake's a guy who he's not making any excuses. He's pushing hard towards his goals. I think a lot of people can get a lot of inspiration out of that. Quick reminder, if you're new to the podcast, going all the way back to episode 1 is highly recommended. We've had so many great guests on, and you can glean their wisdom and apply it in your own investing endeavors. And if you wouldn't mind, if you're watching on YouTube, hit the like, subscribe, and notification bell just to help this get out to more people. And if you're listening on audio, of course, a 5-star review on Apple Podcast would be very helpful. So thank you for that. And without further ado, let's jump into episode 182 with Jake Novis. Hello and welcome to the Andrew Hines Real Estate Investing Podcast. I have Jake Novis on the show. Jake, I've seen your posts and Instagram stories for years, but never actually talked. So here we are.
Thanks for having me. Big fan of the show and grateful to be here. So look forward to it.
Yeah, awesome. So I know you're busy in real estate. Obviously, I've seen the Airbnb posts, but I don't know what all you're up to. You just told me off camera you're a realtor, which I didn't know. And but tell me the story.
Definitely, yeah. So realtor is a newer position, but my real estate journey started about 10 years ago when I just started being interested in the space, focused on education and learning. At the time, I was a student, so not really in a position to buy, couldn't qualify or anything like that. I did have some savings at the time, so I started by just being a silent partner in a family's venture in multifamily space. So I was involved with that, shadowing for a few more years and just educating myself and learning. In 2016, I was prepared and ready to dive in, so I partnered with some individuals on a sixplex in Hamilton to get started. Over the next few years, we bought 2 more buildings, and although we had a value-add strategy, we just kind of had it operating in the background. I was working full-time, and we kind of realized that things weren't really growing as quickly as we had hoped. So in 2020, at the start, I quit my job and started a property management company to dive in and manage those properties at full speed.
Mainly your properties? Or?
Mainly my properties, as well as some others for clients. So just a bit of a quick start. Took on around 40 to 50 units, I think, when I started initially. A mix of my own and some close partners. Not taking on outside clients because I mainly wanted to focus my full time on my properties. So I spent the next year doing everything in the business, cutting grass, doing renovations, leasing, everything to build that management business, as well as improve the properties we already had while holding off any new purchases, just to really make sure those were acting and stabilized how we wanted them to be. In 2021, I dove in a bit further with my girlfriend who wanted to join the business. We purchased a duplex and a fourplex in Lindsay. We had to get creative to purchase those since we didn't really qualify for financing, but focused most of 2021 on those. And then in 2022, I decided that we wanted to try to grow the business long term and have active income to supplement our investments. So that's when I decided to get my realtor license, joined the Catano Loeffler team, and I'm going to be focusing on helping others buy and sell and invest while continuing to grow a portfolio for the next few years. Yeah.
Okay, so you just joined their team. This is your start to real estate then?
Right now is the Catano Loeffler team?
Yeah, or have you already been with another broker?
Nope, I just got my license about a week ago, so very fresh.
Okay, you're fresh.
Yeah, very fresh. I really enjoy that side of the business. Everything I was doing at the time when I was managing, I did close on some private deals that I handled, so I really excelled in that side of things, opposed to just the day-to-day management stuff. So really wanted to dive into that side of things more. So yeah, just got my license and going to focus on that as a bit of my strength.
Yeah, tell me about the property management company. Well, first, before we even do that, like what were you doing before? What was your job before you started the management business?
Yeah, I was in engineering before, so I worked at a robotics company for about 3 years before I officially quit. So 5 years of long schooling, only worked for a few years, and then quit and started the management business.
Were you like a PEng or?
I didn't get my PNs, just the field I was in. I didn't really need it for the work I was doing. It was mostly software, so I didn't really bother. But it was the path I was going to get my PEng and live a life of an engineer, and then decided to make the pivot and just quit. Yeah,
it's crazy. People go to these professional schools and then eventually just realize, hey, you know what? I didn't actually need that to do what I'm going to do, and do it anyway.
Yeah, it was a tough decision for sure. But I mean, it was a good time to do it. I don't have a lot of obligations, and I'm still fairly young, and it kind of hurt to go through 5 years of school and then 3 more years of working, and then just to leave the field entirely, because it's hard to go back into if things didn't work out. But I mean, it was a commitment I wanted to make, and yeah, it worked out.
They say that, but I feel like nowadays, like everybody's starving for employees. Like they the jobs are there. It's finding the workers that seems to be the problem. Like if you got a work ethic, I feel like you can get a job anytime.
Definitely. I'm confident I could go back if I wanted to. I feel like the field I was in software, it changes pretty quickly. So it's harder to dive back in, but so I definitely could have, and I always had my old job lined up if I wanted to go back, so I had that safety buffer. But it was a commitment I wanted to make to get into real estate full time. It's always something that I envisioned doing, so it made sense.
And when you say real estate full time, you mean just being real estate adjacent, if it's property management, investing, just being in the space.
Exactly. Yeah, I always wanted to invest full time, but I didn't really know what that would look like in terms of building an active income. So whether it be the management business or a realtor or whatever it was, I knew I wanted to be in it long term eventually. So I just need to find something that was a good fit to stay in.
Yeah, I thought about it the same way. So early on, it was like, okay, well, I don't want to do anything else. I want to just renovate properties and make really cool rentals. How do I turn that into active income? And eventually started the company to sell them, but it's so much better to keep them. So it's interesting. I thought about property management. I thought about realtor. I had a background as a mortgage agent. Which these are all helpful things to be in, right? You learn so much about deals. I'm sure as a manager, you found off-market deals. Like you found people selling stuff that you wanted to buy.
Definitely, yeah. As working in property management, the main benefit was learning, I guess, the ropes of real estate, like boots on the ground. But I did find other deals, and more importantly, I just had the time freedom to go out and look at properties. So on a 9 to 5, I could only look at properties on the evenings and weekends, whereas running the management business, I could go around any time of day and set my own hours to go look at those deals. And so it was a lot easier to find. And that's essentially what led us to finding the 2 properties in 2021 that we were able to close on because I had that flexibility.
And like, I never hear people talk about management businesses. Nobody, it's not sexy. Nobody's talking about starting management businesses, but I always wondered, could it be sexy? And, some of these managers out there are charging, pretty good premiums, pretty good fees. When you looked at that as an opportunity, what did you foresee as being possible? Like, I'm sure you had maybe some notions that could be your active income. Obviously, you quit your job.
Yeah, it was. When I quit my job, it was the main plan long-term to grow that business as the active income source eventually. But when I got into the business, especially if you're working on value-add projects where there's a lot of rougher buildings or rougher tenants, it's a lot of work and time commitment to really stabilize those and improve those properties. And the fees and the management aren't really worth it, in my opinion. Like, it's a low profit, low margin business, I think. And unless you're managing high-end luxury properties, with high fees and low maintenance, it can be hard to really sustain that. And it's a tough job. I mean, you have tenants yelling at you all the time. You have to deal with issues every day. So I'm keeping the management business going, and I'm bringing somebody on to help run that for our properties. But it's not, in my opinion, unless you're charging really high fees and your customers are aware of that and are willing to pay that, it's a tough business to grow. And it's, in my opinion, I was more suited to the realtor aspect of things, and it was a higher value for myself and our business.
Yeah, like what would you need to charge in property management in your mind to make it worthwhile?
I think to run a high quality business that could get referrals and continue going, it's at least 10% in terms of serving all the notices, booking appointments. If you're scheduling contractors, you're probably taking a fee for that. So at least 10%. I know a lot do lower, but then you get hit with charges on the side that you maybe weren't aware of, or your properties just aren't being kept up to date, like annual fire inspections, scheduling the maintenance, all the things that you should be checking regularly. If you want to do it well, at least 10%, and then it goes up from there. So
did you have help in the business? Like, like an administrative?
No, not at first. It was just me. I spent 3 or 4 months in my old job building up the business, so getting everything in place before I quit. So I was ready to dive in myself. More recently, my girlfriend Lauren has joined me in the business full time, so she's helping with a lot of that stuff and is taking that on while I switch gears into the realtor business. So she's handling all that stuff now and helping me grow that.
Okay, so yeah, I think the biggest thing, like you're pointing out, it's a heavy administrative job. And the hardest part I'd have with it is it's one thing to have administrative help, but it's another thing to give over access to your bank accounts, give checks, all that stuff. That's the hard part, and that's the part that in my like daily business I don't like doing. I don't like paying people. I don't like cashing checks. I just feel like a glorified financial controller when I'm doing it.
Definitely.
But it's a needed thing. Like, it's part of a business that you need to do.
Yeah, I thought of that when I was initially thinking about handing things off. So I started building up the systems with just, password sheets and secure logins and separating everything into SOPs that somebody could take over and I could be comfortable with. And I still do like the monthly reconciliation myself, so I see all the expenses so I can keep an eye on things.
Books, okay. Yeah.
But at the end of the day, I knew I would have to hand that off eventually. So luckily for me, my partner wanted to join. So Lauren's doing all that, and it's somebody I'm comfortable with handling that for now. And now she's getting the experience of going through all that and seeing maybe what I was missing or where some weak points could be so that she can improve on that. And then one day hand that off to somebody as well. So it's definitely a scary thing to hand off the bank accounts and some major responsibilities.
Yeah, I'm wondering if it could just be streamlined, like once a week you do all payments or something like that, or on the first or second of the month you do like all receipts or something like that, where you have somebody else that organizes everything and gives you a list, pay the following.
It definitely could be. And I mean, we don't work that out right now in that way, but actually just think about that. I mean, so we use Buildium to track all of our expenses and income and expenses. So
you don't use QuickBooks at all?
No, sorry. We do for the properties day to day, we use Buildium, and then once a month we reconcile on QuickBooks. But it's easy to add all the bills into Buildium. So at the end of the day, you could log in and pay all those bills. One thing I like to do just for preference of our business is I like to pay all of our contractors, especially the smaller ones, same day just to get the highest service, because over the past 2 years, it's been incredibly difficult to find workers and to find good help. So I like to keep them happy. So, but it could definitely be a weekly thing that you could get.
Yeah, I switched to that because I think paying within the week is still fast.
Definitely.
In contractor standards, right? A lot of people want to go to 30 days, although that's getting harder to do, but especially on new construction, like 30 days is expected. Some people go 90.
Yeah.
But yeah, with these smaller contractors, it's difference between them showing up and not showing up a lot of the time. And I have like people who like they just won't show up until I pay their last bill, even though it's only been 2 days.
Yeah.
I'm like, really? Is that where we're at? Obviously, I'm good for it.
Yeah, and it's definitely fine to pay even by the week, but I find, especially with some of the important contractors like electrical or plumbers, I like to have them, ready on the phone if something comes up. And that's something that takes a lot of the stress out of the management business if you have those reliable trades ready to go. So it's definitely good to keep them happy. But
yeah, you gotta keep them happy, like whatever it takes to do that. So I completely agree. So I mean, the reason I ask all this is because I feel like there's got to be a way like to automate property management to a degree, because I see on the other side of it, when I've gotten my properties working well, they're actually extremely low management. And then that's where you can really start to enjoy that. If you're doing 10%, you're getting, say a $3,000 duplex like rent. Well, actually, they'd be even like $3,500 top and bottom, right? Together?
Yeah, roughly.
So that's $350 a month. Would you be doing leasing fees on top of that?
Yeah, so leasing fees I typically would add on top because I do a lot of work in leasing in terms of vetting tenants and making sure I get top rent, top dollar and the best tenants. So it's a service that I would add on top, usually about a half month's rent though. So it's not quite as substantial. But yeah, I think I would add that on top. And then it could definitely be a business that could be profitable and well worth running. But just the way I found is the amount of help I would need, it kind of just pays for the help or pays for the workers to do that, and then also the administrative fees that go along with it. So if you scaled it and grew it, I guess the profits for the amount of work to scale, the time spent building that business out would be much better put into something that's a higher value.
Which I think is why not a lot of real estate investors are doing it.
Yeah, definitely. And it's why I think that it's hard to find good property management as well, because it's an easy job to get into in terms of you can just start, like there's no licensing required in Ontario, but so anybody can really get into it, but it's hard to, I guess nobody really wants to put in the time to grow it. to be large.
Yeah, I mean, it's one of those things where I think, like you said, everybody needs a good property manager. So it's this opportunity that's also no one wants to do it. So I'm like, there's got to be a way.
Yeah, there has to be a way. But the thing that I found was when I looked at everybody who was successful in growing a multifamily portfolio, which is where I kind of want to be long term, they all had their own in-house management. So I really saw that and I thought, why is that? And it's because of the, I guess, efficiencies that you can have in it, as well as, I guess, it's not really worth growing for other clients as much as it is just having them there for you when you need them. So we're just going to keep it in-house. And
yeah, I think it's a big control thing, right? As a real estate investor, you want to have control. You want to know your tenants, like have access to them and all that stuff. So that's why I think a lot of people bring it in-house. And you get better selection of tenants because you know you're going to look out for the best tenants, whereas not necessarily your property management would.
Definitely.
Like, what are their motivations? You know you're going to deal with them. I guess the property manager knows they're going to deal with them too. But they might be more inclined to just get somebody in at a lower amount because it doesn't affect them nearly as much as it affects you.
Yeah, and I mean, that's probably the biggest reason that I wanted to start the management business myself and have control is because when we first started, I mentioned our buildings weren't really growing as quickly as I wanted to, and I didn't find out until I took over that the initial manager we had in there was putting bad tenants in at a discount to get them out of their properties. So it was really just hurting our business. But when you're the investor, you're not there every day. You don't really see that. You don't really know what's going on. So it's, for me, it was to keep that control. And I think it's really important to know exactly what's going on in your properties.
What's going on in your properties? Yeah. And I've shared this story. Like when I cut ties with my old property manager, like I didn't even have my tenants' contacts. Like I had nothing, right?
Right.
That's a very vulnerable place to be. And they were doing, everything's good until it's not, right?
Yeah.
So you can do things that way, but then that could blow up in your face. And that sort of blew up in my face a little bit. I recovered, but
It's a lesson learned though.
Yeah, it gave me like one more incentive to, okay, I want to take more control of my business.
Yeah. And there are plenty of investors who, have always outsourced management and it goes very
great.
well and it's great. But it's just another risk and control is
there's things you can do, right? There's a nice balance where you can have your finger on the pulse and say, hey, you're my manager, but I'm going to need the following. I'm going to need copies of these, keys, whatever.
Yeah, I think just reviewing more regularly, like I wasn't reviewing statements in depth each month when I had the management. So, large expenses were going through that maybe shouldn't have been or things like that. So still just keeping an eye on things. And at the very minimum, just learning the business anyways, like learning how to lease or what should be involved in management, so you know what to check for.
I feel like it's invaluable experience. Like what you've done it's going to like shape the way you invest for the rest of your investing career.
100%. I thought I knew everything about investing going into it, and then I realized I knew nothing compared to being on the ground and doing everything, dealing with the tenants, doing the maintenance, everything, learning how to run the business. I guess personally.
Yeah. Be cool if there was a survey program where you could go work for a broker for a while, work for a realtor for a while, work for a property manager for a while.
That would be like fantastic.
And a contractor for a while. You'd know it all.
You'd be the best investor there is.
Yeah. And an appraiser.
Okay, yeah, just about everything.
It's like a five stop survey program. Man, you'd have it down.
Yeah, exactly.
Okay, so very interesting that you did that. I know another guy who has a property management company. I think he's still doing it, and it's there obviously is a way to make it work. But I hear you. Like you look at your time spent and say, is there not a better way that I could just focus this time on finding properties, which you've done, and now that's going to yield far more, or should yield far more in the long run.
Yeah, when I looked at the time, I would have to commit to say, I think when I looked at growing the management business, I wanted to get, say, to 80 additional units to afford to bring on another employee that would be scalable. And then I looked at the time required to get to that point, and if I just spent that time looking or building my own portfolio, it could be much more valuable. So
yeah, unless you already have like the whole people and systems built out, it's already there. Which maybe you're getting to that point now with the management company. Do you want it? Are you planning on just continuing it as it is, or are you planning on like winding it down?
I'm just going to continue it as it is to manage mine and my partner's portfolios. Won't take on clients, but just going to keep it running and just to cover what we need.
So basically self-management.
Self-management, yeah, 100%.
And you don't have any other clients right now, just your partners?
I just family and friends that have properties that needed help, so I manage theirs as well. But that's about it. Yeah.
Okay. All right. So what about the prospect of Airbnb management? Because I know you're doing Airbnbs. Yeah. That I know a lot of people are charging 25% for, which is much more attractive overall.
It is. Yeah. So Airbnb management is much more involved, and so I think that fee is totally fair. We operate our own managed Airbnb, so I'm not taking like a big fee for that just because it's our own property.
Sure, yeah.
So I'm not doing that for others. It's something that we considered, but it's really a hospitality business, and it takes a lot of time to do it right. And I mean, in terms of growing that side of things, it's not something I would be doing. We just, again, manage those for ourselves. But I spend a lot of time setting up the Airbnb business ahead of time that it would be as hands-off as possible. So systemize everything, automatic check-in and things like that. So it's honestly not too much for us to take on. But if you're doing larger vacation properties, the fees would be quite a bit higher for that because there's a lot more involved to be there every day. And
do you just have the one Airbnb?
We have one operating right now, and we're adding 2 more. Should be wrapping up this week, so we're taking those over as well. Yeah,
you're taking them over.
We're not taking those over, but we're just getting those going as well. Yeah.
So these are purchased properties that you own that you're just running it.
Yeah. So the one is I'm partnered with my girlfriend Lauren, and the other one is with her and my brother Chris as well. So
okay. So what does your portfolio look like right now? Like what do you got going on?
Around 35 units or so. So with the few buildings in Hamilton that we started with initially, I did buy a condo in Waterloo as soon as I started my job, minimum percent down, or 5% down, and lived in that for a little while. And then my partner Lauren and I purchased the duplex and fourplex in Lindsay. That was in 2021 when we were a little uncertain of where things were going, but a lot of things you talked about in the podcast honestly helped a lot, like purchase for the cost of building, buy in a rural area, all those things, like buy with extra land. So we found a couple great opportunities that came up out there. So we purchased those 2. And then along with my brother Chris, we purchased a 5-plex in Fenland Falls that we're going to convert a couple units to Airbnb as well.
Fenland Falls?
It's just north of Lindsay. So it's a cottage town. Yeah.
Yeah, I'm just looking at Lindsay because that's quite a ways away.
Yeah, so all of 2021, we were essentially driving there on weekends to renovate that one ourselves, and it's a long drive.
Long way. So do you take the 407 or?
Every time, yeah.
407.
I'm originally from Lindsay, so I know the area well, and so I was always going back there anyways. But we drive back there on weekends to work on those places.
Wow. Okay, so now is that managed outside of your portfolio or?
No, we handle those as well. Since I'm from the area, we have a lot of good contacts. It's pretty easy to manage. It's kind of one of the reasons we were comfortable going that far. I probably wouldn't have gone that far any other direction, but knowing the area well, having a lot of contacts there, it made it easy to manage those. And so we still manage those. And my brother has some stuff in Peterborough. I manage those for him as well. So
really?
Yeah.
Wow. Okay. And you're Cambridge, you said?
Yeah, currently in Cambridge. Yeah.
Yeah. So that is, let's see, right now, 2 hours and 17 minutes to get over there.
Yeah. Last weekend, it was about 4 hours, but we take the 407 usually. And
oh man. Yeah. I can't handle that drive on the east side of Toronto, which I know, Quentin D'Souza, when he comes over here, he complains. He's like, I'm not driving over there.
Yeah,
I don't blame him. Like driving from like Oshawa area over this way.
Yeah, I've become used to it. But again, we take the 407 quite a bit to make it worth it. Yeah.
Rack up a nice bill on that, I'm sure.
Definitely, but it's worth it. So those long weeks where we were working, every weekend in Lindsay, it makes it easier.
Okay, so you got, 35 units spread out over a lot of different areas. You said you had some stuff in Hamilton as well?
Yes, Hamilton as well. Yep.
Okay.
And then
I saw you posting stories about it was like row houses. Is that the one you were telling me?
So there's 2 buildings, just 2 buildings in Hamilton, a 6 and a 9 unit. So just simple apartment buildings.
Okay, apartment buildings.
Built.
You put air conditioning on them. I think you were showing.
Yeah, on all of them. Yeah. Yep. And then we do have a 6-plex in Cambridge as well, where I'm actually just living in one of the units, and then I have my condo in Waterloo as well. So I'm mostly in those areas working those units. In the Hamilton properties, we had, I think, 10 or more units turn over in the past couple of years when I was taking them on. So I was there every day. So mostly focusing on Hamilton the past couple of years.
Okay. Now you're changing gears, obviously, being a realtor now. And what's the angle? Like, what's the approach? I know you're on Mark's team. Mark's been on the show, Mark Loeffler, for anyone wondering. Been on this show many times. So tell me about what the plan is, of what you're going to be focused on, specializing in.
Yeah. So the reason I got my license and going that route is, for one, we just really wanted to build an active income in the business in a way that served what we were trying to build long term. So we looked at a lot of tools like growing the management business, or like you said, becoming a mortgage broker, or even just flips. And the one that I found out I could be the best at that also served our business was getting my license. So when I looked at all the highly successful investors that have a large investment portfolio, I reached out to them and asked what they recommended, and the most effective tool to help build active income and supplement your business was becoming a realtor. So
because you always have the option of buying a deal, right? You see the deal, you know what, this one actually makes sense for me. But your job is looking at deals pretty much.
Yeah,
right?
so you're looking at deals that help your clients and help you. And you just have access to a network, to everything that's really involved with growing a large multifamily portfolio, which is where my long-term goal is, while in the short term, bringing in some more income. So I looked at things like flipping, for example, but I found that, even if I have a successful flip, it doesn't really push a long-term buy and hold, I guess, strategy. So becoming a realtor was the best next step. And then, the Catano Loeffler team is obviously one of the best. And so really wanted to get involved with them. They have a ton of investments and grow and learn from them as well.
Okay. And is that an arrangement where they'll be, because I know Mark gets so many deals he can't even handle coming to him through his show.
Definitely.
Like, will you be working on stuff that comes in?
It's a bit of a mix. For now, I'm just going to be working on my own projects and strategies just to get familiar with the space. And then as I grow, I'm sure that it will kind of lean that way as well. But for now, just being involved with the team, so learning from experience and just being involved with the office and, seeing how they handle deals, what they do, what their process is to help me, I guess, serve my clients better. And then I'll be working with my own clients at the start and then hopefully, I guess, transition to that as well.
Okay. Now, I was going to ask you something and it's slipping my mind right now. Commercial. I guess would you consider yourself kind of like going in the angle of being a commercial realtor?
Yeah, in the sense of, multi-residential commercial.
It'd be
definitely.
like 6+, 10 units, all that stuff.
Yeah, that's where I really want to grow my business too. We took on the smaller deals in 2021, the 2 and the 4 unit, because we were able to get into those without partners. But long term, I want to grow into those larger deals. I won't be really focusing on commercial in terms of storefronts and retail space, just because that's a totally different expertise. So for now, I'm going to focus on anybody who wants to buy and sell, obviously, but then also the investment space, like 6 and up.
But you're not going to be doing people selling their homes, or is that?
No, we will as well. The reason I joined the team is they have a mix of residential and investment focused agents in the team with experience from all over. So either myself or somebody from the team will be able to handle the residential stuff, and then as well as the investment.
Cool. So you work will Cambridge be your area, or you'll be like kind of all over this place?
The team focuses on Hamilton, Burlington, Oakville, so I'll be focusing on that as well. That being said, I'm familiar with obviously a wide range of markets, and the team kind of goes anywhere. So we'll cover everything. Obviously, used to driving far for deals, so we'll handle everything, but going to focus on this area for a little while and then move to this area as well.
Okay, so obviously you've got an entrepreneurial edge, a little bit of a spirit. Does it make you nervous at all? Like when you quit your job, most people don't have the balls to do that. Did it make you nervous at all? How did you feel, or why did you feel like that was okay to do?
It was hard. It was definitely really hard. I just felt like I looked ahead at the path I was on. If I stayed in that field and where I would go, and I would be, working full time in that field, it's tough to stay in that field and it's hard to manage the properties on the side. So I just kind of thought about where I really want to be in 5-10 years and what I had to do to get there. And it feels like a step back when I quit my job, and the next couple of years were much harder, but long term, it's where I want to be. And so I think it was worth it. It's definitely a risk. I spent, the past couple of years really living frugally and just, cutting back on a lot of things and sacrificing a lot. Like, Lauren and I were always thinking of purchasing a house soon, but we kind of just put that on hold to work on this business. And then that became the priority. So taking the step back and quitting my job was definitely worth it, but it's tough. And I feel like that has happened a few times where I started the management business and then realized, okay, I don't really want to grow that. So now I've essentially quit that again to become a realtor and focus on that side of the business. So it's just, kind of identifying what's the important next step to get to where I want to be, and then diving in. And even though it's a step back at the time, I think long term it pays off. And definitely cutting back on expenses and living under our means has helped do that.
Are you like fully house hacked where you are?
I'm in one of the units that we own. It's a 6-plex, so I'm living in one of those. I've fully renovated it myself, so essentially a house hack. Although I do have partners, so I still pay full rent. But it's just an easy way to keep an eye on things. So so there's no conflict there. But I still do all the work on that one. We fully renovated it. It's a 3-story townhouse, so quite a bit of work there that we've done, and just being on site as well has helped a lot. So
okay,
a bit of a house hack, but a bit different.
Yeah, it's a little different if it's yours. You can kind of work out those numbers so you're paying nothing, which I don't know how many people are still doing that now? I know it is still happening, but how common is it? And maybe how you have to adjust how you live.
Yeah, and we debated moving to try to house hack another duplex as well, but just in the current market, we didn't really find that it made a lot of sense. And instead of house hacking, I mean, if I can just rent and put my money into something that's going to be more valuable and a higher ROI, then it makes sense to do that. So not necessarily house hacking, but just I guess doing whatever you can.
Yeah,
I
live frugally. And I remember watching your stories and kind of hearing you say that, and I knew that was a little bit of the vibe. And if you're going to go out on your own and take that risk, I think a lot of people think that's what you have to do. You have to find a way to cut expenses. I think that's just a good life skill.
Definitely.
Talk to my wife about this all the time.
Yeah.
Like, let's just always, if we don't need to spend, let's just not.
Yeah.
It's a good habit.
Yeah. So like Lauren and I debated moving as well, like last year, and adding some other things and going on some trips. But we just cut back and we put all of our money into those Lindsay properties. And I mean, the equity growth was incredible, so it worked out really well. Obviously, the cash flow month to month is tough to hold, living like that, and putting your money into projects like that. But long term, it's going to help us get to where we want to be.
Okay, so you said cash flow is hard there on those ones. What do those projects look like? What did you want to pick one of them and just run me through the numbers? How that?
Yeah, sure. So for example, the first project that Lauren and I went in on was the duplex. We found the duplex and the fourplex from the same seller. It was a seller who had, a ton of properties in the area. He was retiring. He's just kind of offloading some properties. And we toured them and obviously identified these were really good properties. He takes great care of them, but under market rents and needs a bit of work on the inside. But it's something that we decided that we didn't really want to bring in partners on. We just wanted to try to go about it ourselves and build our own portfolio. But obviously without the cash, it was difficult to do. So I have a condo in Waterloo. We essentially put a second mortgage on that to purchase the duplex. But then when we were going through the closing process for that, we realized that we couldn't get financing. Well, we kind of knew ahead of time, but how it ended up working out is the seller, he didn't really want to sell all of his properties at once because of the capital gains, obviously. So we kind of told him, okay, well, you can sell, these two properties this year if you do a VTB. So we negotiated with him a VTB. He initially wanted to go to 60%. He was comfortable with us after having some conversations to go to 80%, so LTV on both properties to close in the same year. And we really wanted to push those deals to close in the same year just because we kind of saw where the market was going and they were both great deals and we didn't want to lose out on them. So we took some private money on my condo to purchase the duplex, and then as well I did some additional private money to close on the fourplex. So highly leveraged at the start, which was difficult for us. That's why we really cut back expenses to hold those. And then we focused the next year on renovating that duplex, one of the units in that, which is now an Airbnb. And so the additional cash now from that helps hold the other property, which is kind of helping us balance those two out. And now we're in a good position to just kind of hold those and let those ride. And then the fourplex, the reason we really liked it is it's on a double wide, double deep lot. And one of the things you always preach was, buy extra land. So we're starting the process of looking at how can we either sever that to build or even just to sever to sell off, because there's the fourplex is just on one side, and which is the reason we liked it. So, but yeah, highly leveraged to get into those, which is one of the reasons after we bought those, we kind of put the brakes on and did a lot of the work ourselves to just to get those up to speed.
Yeah, just get them going. I mean, sometimes that's what you need to do to get it moving.
Yeah.
At least to be there on site every day, so you can drive it forward. What did you buy the duplex for?
So we purchased that at $370.
Okay.
Yeah.
And what kind of investment did you have from a construction renovation standpoint?
So total reno and holding cost was around $100,000. I think $110 it came to at the end of the day.
Okay, so
and
for about $480.
Sorry?
And for about $480?
Yeah, exactly.
And what kind of valuation did you get on it?
So that one appraised for $750 in May of just this past May.
Okay.
So
and you got 80%? Or you
so
can't
that's
get,
the thing
can't
with
get the financing yet.
Sorry?
Can't get the financing yet.
Can't get the financing. Well, actually, we can get the financing through B lenders, but the thing with the seller is, so he was really against selling both those properties unless they were large VTBs so that he could defer the capital gains. So we had 80% VTBs on both of those. And after 1 year, this property had kind of stabilized, and we really wanted to refinance at least one of them because it's at a 6% interest only rate. Obviously, that's pretty high to hold. So we can, we have just kind of had a conversation, like we'd like to pay out at least one of these. He was a little hesitant because he's going to get hit with the tax. So we said, okay, we'll give you an extra 10 grand to split those costs with you. So we actually refinanced the fourplex the year after because its value had gone up as well. We did a bit of work there, and we chose that property instead because we could get more out of it because the value is higher. And then we kind of use that as a bit of a refinance to help things out. And for now, we're just going to hold the VTB on there. We actually sort of refinanced his VTB. We asked him to increase it to basically get our initial cost back. And he did. Yeah, he saw that we put about $100,000 into it because we toured the property with him. And so he was comfortable with it. He gave us an extra $100,000, amended that mortgage, and that kind of
still at 6%.
Still at 6%. And
That's
then,
awesome.
So basically we're just going to hold that for now because it makes sense and it can hold the other property. And it was it's tough because we obviously could refinance at least his entire portion out at a lower rate. But at the moment, he has a lot of other properties in the area. We have a good relationship with him that we'd want to work with him on in the future.
Oh, that's awesome.
We're just, mutually holding that with him for now because we've agreed to it and just going to keep riding that one out.
The way things are going, 6% isn't really that much anyway.
Yeah, at the time, it was really it was a hard pill to swallow because everybody's posting 1.5-2% rates, and we were at 6%. But then it worked out.
Now mortgage rates are into the 4s.
Yeah, B lenders rates are going to go up to above that anyways, and it's interest only. So for the next few years at least, it's it makes some money off the Airbnb, and it's in a good position.
So one unit's Airbnb, the other unit's rented regular?
Yes.
Okay. Yeah. What do you average monthly rent across the year, do you figure?
The long-term tenant she was initially at $1,000 when we took over, but we upgraded some stuff in her unit as well. Put in air conditioning, did some other things. I think she's up to $1,250 now. And then the Airbnb, we average after paying cleaning and added utilities, things like that, around $2,400.
Whereas if you didn't do it as an Airbnb, you would make what?
I think probably around $1,800. The rents in Lindsay are really hard to estimate because there's such a limited supply, but so we could maybe push it. But I think that was kind of what we ballparked going into it.
Okay, so on that one, what are your annual taxes?
Taxes, I want to say, are $2,500, something around there.
All right, not too bad.
High, but.
And then insurance-wise?
Insurance is $2,600.
And okay, so maintenance.
Maintenance is very low because we've got basically a new roof, new furnaces, new AC. It hasn't really been anything, but I mean, whatever you estimate.
We'll put in a reserve there, so I'll put 5%, which is $2,100 a year, which is not that much.
No.
Utilities wise, are you paying anything?
We pay water and the upstairs utilities. So I'd say about half the utilities.
Okay, so if water, it's like $150 or $200 a month.
Something like that. Yeah, with the Airbnb, it definitely varies.
175 times.
And then the gas and hydro for that unit as well.
12. Oh, okay. So what do you figure annually you're into everything?
Gas, maybe $100 a month. Hydro, I kind of say $100 a month for everything. Just a safe bet.
So another $200. So you're about $4,500 across the year for all utilities. Does that sound high?
Yeah, it definitely sounds high. But
so $3,500 maybe?
Probably, yeah, more or less. Yeah.
All right. I think that's a reasonable ballpark. Okay, so management, you're self-managing.
Yeah.
So I'm just going to leave like 1% in there for like your basic expenses. And landscaping, anything?
No, actually the tenant that is the long-term tenant does the landscaping. We do pay snow removal though, so $400 a year, maybe something like that. The small driveway.
Nice. Okay.
Maybe $500, yeah.
But okay, so we'll put $500 for that, and then just like a $500 miscellaneous. And okay, so your cap rate on that looks to be about 4.21, which on your 6% mortgage, let's see how that looks. Probably still pretty good. Is that negative? Do you have negative cash flow on that one now?
It's close to even. I mean, I think my numbers were around $200.
Is that the one? That's the one you refinanced? Like you did get?
No, that one has the high interest.
That
so no, not that one. Sorry, that one he did go up on the mortgage.
Yeah, he went up to 600,000.
400. Sorry, just 400.
He went up to 400,000. Yeah, okay, so let's see here.
Yeah, we decided to just keep that one low. Going into the current market, it was a little risky to be highly leveraged, so we're just keeping it at that for now.
Yeah, I'm just trying to see. Oh, yeah. Here's what I was doing wrong. Okay. So yeah, it looks like you would have about $560 cash flow, around 500, something like that.
Yeah, we kind of estimate that, which works out well because the other property, because we bought it with some private money, it has actually about negative a few hundred a month to hold that. So they kind of balance out. Yeah.
Yeah, and this is one of the things I used to talk about back when, because people would say, "Well, you never buy negative cash flow. You can never buy in Toronto." I'm like, well, first off, big deal, but it's okay if you have another property that covers it, right? Then you're not paying for it out of pocket.
Yeah.
Another tenant is paying for your negative cash flow.
Yeah, and there's a couple things like there's that, which is can it carry it with another property, which is great. But then also, I mean, the value add in the other property. So there's a few units that are, in total a couple thousand under market rent. So if we have a single turnover anytime soon, we're going to be above water again. And then with that double lot, we're really just, I guess, in the long-term play, it's worth to hold that for sure.
I actually just released an episode. I don't know if you heard it, the Dan Illis one.
I did.
Yeah, it's well timed, right? Because it's the same idea, and he's just he's got his checklist. This is what you got to do, what you got to look for, and there is definitely a lot of money to be made in that.
Yeah, him as well as I think Ryan Carr. So I really enjoyed that episode. Just really learning what to look for. So I mean, when we bought this, we saw the lot size was wide enough, I guess, to fit the severance. The square footage was deep enough so that we could fit it. So I checked all those boxes, which is a good starting point.
So your house is like pushed to one side?
Yeah, the fourplex is on just the front corner. So we can, and in Lindsay, you're allowed additional dwelling units. So you can probably get an additional unit in the back as well as sever, and ideally 1 to 3 units on the other side with the additional dwelling unit, which is smaller, obviously. But so I don't know much about that process, so I'm getting help getting a feasibility study done to see what can be done with everything, because I don't want to go into that process and miss something that could have been done.
And
so
who's doing your feasibility study?
A company in Peterborough, EcoView, I believe. So
so you just asked them, like the urban planners?
Yeah, the urban planners. Yeah, exactly. So I had some conversations with guys like Ryan as well as some other architects to get an idea of what I should do, and they either said spend the time to learn it well and do it yourself, or get help, because obviously my first time around, I want to focus on my realtor business, and I don't really have the time and energy to put all my time to that, and I don't want to mess that up. So getting a professional opinion on what can be done there, and then whether we just sever and sell that off or do something with that, we'll figure out.
Yeah, I mean, I think at the end of the day, as long as you can get it done at a reasonable price, if you get an agreed upon, hey, this is what this is going to cost to know if it works. I mean, like people like Carmen, like she pays big money to assess a property.
Right.
But I mean, the ones that win so big that it's all worthwhile in the end. Right?
Yeah. So it's a totally new space for me. That's why, I got a planner to help out, pretty much figure out what can be done and what the cost will be, and then we'll make a decision from there.
So how wide is the lot?
I think it's 80 feet. Roughly, and then 190 deep.
That's a good that's a good lot.
Yeah.
So hypothetically, it could be 40 and 40.
Yeah, I think the minimum is high 30s. So it could be.
So you're already conforming then for use.
Yeah, the width is conforming, the depth is conforming, because it's so deep. The square footage for a building with an additional dwelling unit is conforming. The only issue right now is our parking's on the other side, so we'd have to get, I think, a variance of some sort to bring the parking to the backyard on the existing lot.
And you're not allowed to have parking in the backyard?
I think we can, but I think it depends. So a lot of properties in the area have that, so I think they'll use that as a case study. I hope at least, and then see what we can do.
I'd be interested in seeing how it works, because smaller towns, my experience dealing with their municipalities, like their government office, is they're a lot more fly by the seat of their pants. Like they kind of make decisions. Yes, it's in line roughly with the higher up, laws in Ontario.
Yeah.
But they sort of apply judgment a lot more than strict rules.
Yeah, I would believe that, and I've only heard bad stories about dealing with this one and this municipality.
This municipality, yeah.
So that's one of the reasons that I want to get professional help as well, because I find that, or I've heard that if you kind of go the wrong way with it, you get shut down pretty easily. So
you start to hear those stories and their reputations, but like Welland, for instance, always heard that they were just open for business, ready to go,
right,
approving everything. And then St. Catharines, the opposite, just really hard to work with. So yeah, I mean, it's good to be paying attention to that, but I also think that's an opportunity when others run from it, right?
Yeah, I mean, that's exactly right. So a few people I reached out to said it's impossible or good luck or don't even worry. So I said, okay, let's just try.
Sounds like an opportunity.
Yeah, let's just see what happens. Like if they say no, then we might have sunk a few thousand or 5 to 10, whatever it is, into that, and then it doesn't work out. But I mean, if they say yes, then it's going to pay off really well. So, and then if that goes well, the other properties that this seller has, I know, have a lot of land as well. So it's definitely something that we'll use going forward as well in the area to continue on that path if it works out.
Yeah, it sounds like you've made a good contact. Just keep paying him on time, and he'll hopefully give you more mortgages, sell you more properties.
That's the idea. Yeah, we just try and keep a good relationship, and That's paid off in every aspect of business, but with this one in specifically, yeah.
Okay, so Jake, what are you excited about now? Like your next venture, the next property acquisition? Like what are you setting your targets on right now?
My biggest focus for the next at least year or two is just in the realtor space. Our properties are doing well, and kind of, we're in a good position to have Lauren kind of handle those in the management space. So she's going to take over the management business, and I'm just going to dive into the realtor business. So helping others invest, helping everybody navigate the market, learning and growing from Mark's team. That's going to be my biggest goal in the next year or two. And try to grow that network and those connections in the realtor business, to then also plan how we can grow in the multifamily space long term as well, where I see us going.
Yeah. Okay. So what do you think about kind of the direction of the economy? How will you change your approach, knowing that it looks like recession is, well, I mean, I would say it's inevitable and undebatable at this point.
Yeah.
So how do you adjust? Do you see a point of adjusting? Where are you going to focus your energy as an investor, knowing what's happening?
We've considered kind of looking outside of Ontario, but just personally, like, we have a competitive advantage here just because I know it well now, and I want to stick to what we know well. So I'll help clients all over Ontario, but I'm just going to stick to Ontario and do what we can here. Obviously, yeah, it's going to be difficult with the economy, but I mean, with rents continuing to go up and less people in the investment space, I mean, I'm sure there will be opportunities. So being a realtor and being involved with the day-to-day, I think is going to be a huge advantage to serve me and clients to find those deals that still work and continue to grow that. Because I think long term, I mean, it's a great business to be in, and it's where I'm at now, and yeah, where we want to keep going. So
yeah, I think for the interim, like a lot of people who would have bought may rent. They may rent in anticipation that maybe the values are going to come down, and then maybe they'll be able to buy later. So that's going to drive rents up for a while anyway.
Definitely, at least the next couple of years. Like, rents are already going up this month and continue to go up, and every turnover, I mean, that helps our business, and it's just going to keep the investment space strong. So I think obviously prices might go down a bit, but I take notes from like Quentin D'Souza, for example, who says every property he ever flipped or sold, he kind of regrets. So I'm just trying to hold everything long term. So I mean, even if there's a dip for the next few years, I don't want to sell these properties, and I want to keep growing.
Well, if they work and they cash flow, then
exactly, yeah.
When the mortgage renewals come up and it's like 4% interest rate increase, that won't be that fun for a lot of people.
No, that's going to be a tough spot in a couple of years.
Hopefully, you can combine that with a rent increase at the same time.
Yeah,
if you can turn those units over.
Yeah, and kind of seeing that coming is one of the reasons that, I mean, we've kind of put the brakes a little bit on purchasing for now, and I'm just going to focus on my realtor business to help buy and sell and help out clients, because for example, like those properties were highly leveraged, and we just want to kind of coast on those for a bit while I can grow that income, and then if that happens in a few years and our renewals are up, hopefully either I can support those, or obviously the rents. The goal is the rents are up, and we'll support those as well. But just kind of playing it safe on both sides.
Time seems to help with those things, and I've done the exact same thing you're talking about doing. You take something that's not really a big cash flow play, and you just wait. Like, you just work it, and then when the turnover happens, now all of a sudden you're good. So
yeah, that's the plan. Yeah.
Okay, so Jake, was there anything you wanted to touch on that we haven't talked about?
I guess the biggest thing for me over the past couple of years that I've struggled with was kind of living a balanced life with all these different changes and work going on. So one of the things that I've read from like Gary Keller promotes is like living a counterbalanced life, which has helped me a lot, where you might spend a month or a week, whatever it is, focusing on one specific goal, and you really have to grind and just focus on that and shut some other things out.
Yeah.
But then when you're overworked or starting to feel burned out, take a break and focus on whatever makes you happy or gives you energy, like friends or hobbies or family. So living a balanced life hasn't really worked out well, trying to always balance it all the time. So living that counterbalanced life and kind of going back and forth from what's important has helped me a lot. And, spending a month working on a goal and then taking a week and, coasting a bit and taking things easier. So that's helped me a lot. And I think that's important if you're in this business, because things change quite a bit and can be a little stressful.
So you kind of do a little ebb and flow with it. And if you don't feel like focusing on work, you kind of divert attention somewhere else and then come back to it when you're refreshed.
Yeah, exactly. Otherwise, I mean, you risk burnout, and it can be tough at times. So it's something I'd like to avoid, and I think is important if you're going to be in this business long term, at least.
Yeah, I agree with you. And like, for instance, if you need to sleep,
Yeah.
and then come back when you're refreshed. Yeah, I definitely can resonate with that. So where do people reach you and find you?
Instagram is probably the easiest, Jake H Novis, or I guess I'll include my email in the show notes as well and phone number. And then check out the Catano Loeffler Realty Services website as well, because I'll be working with that team now, so you can check them out. If you're looking to buy, sell, or invest, we're happy to help out. Yeah.
Okay, cool. Yeah, send me the details, and I will include them in the show notes, and we'll go from there.
Will do. Thanks so much for having me.
Thanks for tuning in to today's episode. Please make sure to share this episode far and wide. Help it help more people. I really appreciate you tuning in. I'll see you on the next one.